You check your bank balance, pay your bills, and think you understand where your money goes. But what if I told you that a substantial portion of financial activity happens in a parallel banking system you've never heard of? These aren't your neighborhood banks with friendly tellers and ATMs. They're shadow banks, and they control trillions in assets, rivaling the size of traditional banking. Today, we're going to expose exactly how this hidden financial world operates and why it matters more to your wallet than you realize. Number 1, the invisible empire. Let's start with something that should concern you. Shadow banks control approximately $65.70 trillion in assets globally. That's about 2/3 the size of the entire world economy. But here's the thing, you've probably never heard of most of them. We're talking about hedge funds, private equity firms, money market funds. Number 2, how banks really use your deposits. Here's where it gets personal. When you deposit money in your bank, you think it stays there, right? Not exactly. Banks use a system called fractional reserve banking. They keep a portion of deposits as reserves and lend out the rest, primarily to individuals and businesses. Banks also participate in money markets like the repo market, a $4 trillion daily marketplace where financial institutions borrow and lend short-term using securities as collateral. While your specific dollars don't go directly to shadow banks, they become part of a complex financial ecosystem. Number 3, the regulation loophole. Now here's the truly infuriating part. Shadow banks were specifically designed to avoid regulation. After the Great Depression, lawmakers created strict rules for banks to protect people like you and me. But shadow banks found a brilliant loophole. They don't technically take deposits, so they don't have to follow banking rules. It's like having a restaurant that doesn't call itself a restaurant, so it doesn't have to pass health inspections. These institutions can leverage your money 30-1 or even 50-1, meaning they can make $50 worth of bets with every $1 they actually have. When those bets go wrong, and they do, the losses ripple back to the traditional banking system and ultimately to you. Number 4, the 2008 preview. Remember the 2008 financial crisis? That wasn't just about traditional banks. Shadow banking activities were a major culprit. Investment banks like Bear Stearns and Lehman Brothers, along with insurance giant AIG, engaged heavily in shadow banking through complex derivatives, off-balance sheet vehicles, and structured products that collapsed and took the entire economy with them. But here's what most people missed: the shadow banking system. Number 5, your retirement at risk. This hits closest to home when we talk about your retirement. That 401k you've been diligently contributing to, it's heavily invested in shadow banking instruments. Money market funds represent a $5+ trillion industry, but they hold only a small fraction of Americans' retirement savings, with most 401k assets invested in stock and bond funds. However, during market stress, these interconnected shadow banking instruments can still impact your retirement portfolio. Number 6, the interest rate connection. Shadow banks play a significant role in credit markets, but their relationship with Federal Reserve interest rates is complex. While traditional banks are directly subject to Fed policy, shadow banks operate outside this direct control. During normal times, they facilitate credit flow, but during crises, they can actually amplify financial instability rather than simply dampening or amplifying Fed policy effects. Their influence comes through credit creation and market-based funding, which can sometimes work against monetary policy objectives. Number 7, the China connection. And here's a development worth monitoring. Foreign financial institutions are increasing their presence in the US financial system. China's shadow banking sector, estimated at approximately $8 to $9 trillion total, represents a significant portion of global alternative finance. Chinese entities do invest in American real estate, bonds, and infrastructure projects through various channels. When you pay. Number 8. The Fed's Shadow Banking Challenge. The Federal Reserve has publicly acknowledged the challenges posed by shadow banking to financial stability and monetary policy transmission. While the Fed has expanded its regulatory reach since the 2008 crisis through measures like stress testing and enhanced supervision of large financial institutions, shadow banking activities continue to present oversight challenges. The Fed works with other regulators to monitor these risks, though the decentralized nature of shadow banking makes comprehensive oversight complex. Number 9. Making informed financial choices. So what can you do about this? First, understand that knowledge is power. Now that you know shadow banks exist, you can make more informed decisions about where to put your money. Look for well-regulated traditional banks and credit unions with strong capital reserves and conservative lending practices. Consider credit unions, which are member-owned and often maintain closer community ties. The shadow banking system controls half of all global finance, but it doesn't have to control you. Every financial decision you make is an opportunity to vote with your dollars for transparency over secrecy. Start by auditing your own financial relationships, your bank, your retirement accounts, your investment funds. The more you understand where your money really goes, the more power you have to direct it toward institutions that align with your values. If this opened your eyes to how finance really works, there's a lot more where this came from.